Hey guys, welcome back to the channel. My name is Evan and this is Sense or Sense. And today marks a very important anniversary in the stock market and the indexing of the markets out there. 50 years ago today, on May 1st, 1975, Jack Bogle started Vanguard. You guys might know Vanguard. If anybody's ever used an index fund out there, they know Vanguard. So 50 years ago today was the first date in which Vanguard was incorporated, and very shortly thereafter, index funds became a norm at Vanguard. It took many years for those index funds to come out in other companies, and for a very long time, the industry, including Wall Street and all the other big companies out there, fought them back because they were making so much commission on mutual funds and other ways of investing, such as hedge funds. And it's pretty surprising. I wanted to bring this. I thought it was very interesting. I read an article in the Wall Street Journal this morning about this historic day back in 1975. You know, at that time, most mutual funds were averaging 8% upfront commissions in order to get into those particular funds. And oftentimes it would cost you 2 to 4% to buy them and to sell them with your broker. You know, those were back in the days where you had to call in, you had to talk to an actual human being, and they would broker the deal with someone else, and there was huge commissions. And, this could mean that you would be paying 10, 12% or so of your overall hard-earned money to commissions, both to the mutual fund company and the brokers. So we've come a long way in the last 50 years. You know, even since I started investing about 25 years ago, mutual funds and ETFs were averaging around 1% to 1.5% yearly expense ratios. And now you can build an entire diversified portfolio for less than 1/10 of 1%. 0.1% is not out of the question for a diversified portfolio. Even if you're using very active ETFs, there's still generally, a half to 2/3 of a percent or less now. And those are the ones that are selling covered calls and doing fancy things like selling cash secured puts, going out there and actively managing the actual funds in and out of those accounts on a regular daily basis. Passive index ETFs are down to just a couple hundred basis points, or 0.03, 0.05, 0.07, somewhere in that range. And that's why I said it's easy to put all that together into a portfolio and get a low-cost setup. And the reason why this is important for us is over the years, during all my investing and all of my research, being a certified financial planner over the years, managing people's assets, trading for a hedge fund, etc., the biggest and most important thing that you need to remember as a long-term investor is keep your expenses low and diversify. Those are the two things that make the most amount of money for you in the long term. If you can keep your expenses low, that gives your money more time and more effort to compound on its own without having anybody else take any money out of your account. And then also to passively index and diversify is another way to kind of hedge your bets against a big market downturn, kind of like what we've had this month of April in 2025. Overall, my portfolio is only down a couple percentage points, even though, the overall markets are down 5 to 10% on average. So that just shows how diversification with bonds and foreign stocks and cash can help you tremendously during big downturns in the market. So I wanted to bring you that information about Mayday. I thought it was pretty interesting. Ultimately, it was also the day that the New York Stock Exchange did away with fixed commissions on trading. So that started kind of the downward slippery slope to reduce commissions, and now it led to almost essentially free brokerage accounts, as well as very discounted commissions on options, discounted commissions on all kinds of trading, and then most importantly, expense ratios and lower cost ways of investing for long-term using passive indexes and even active index ETFs and mutual funds. So it is a historic day today. I thought it was very interesting the way that the Wall Street Journal talked about this particular day. I think it was very enlightening. I didn't realize that there was so much that happened all on that day in 1975, but ultimately, it was very important for the future of investing and for us. And what's astonishing to me is just how much this changed in that 50 years. It went from costing the average investor massive amounts of money and having all kinds of roadblocks and having all kinds of companies out there saying things like, you had to go through these mutual funds. You weren't going to want to buy a passive index fund because that wasn't going to give you enough choice. It actually has created more choices for the average investor at a much lower cost. That's how competition usually works. And just the last little interesting tidbit is I saw they also included the research for 5 and 10 year ETF, passive ETFs and passive index funds versus active mutual funds and active ETFs. And they stated that at 5 and 10 years, that almost 90% of all passive index and index mutual funds and ETFs beat the active equivalent mutual funds and ETFs out there. And that's because of the cost, and that's because of the passive nature of the markets, not going in and out of the market on a regular basis, not trying to time the market. There's no way, no one out there knows how to time this market perfectly. And so just remember that when you're investing, that 90% of the passive indexes and ETFs out there beat the active equivalents. And that's over 5 and 10 year periods. This is not an anomaly that goes on for a year or two. This has been going on, and I think this statistic has been around for quite some time. I remember these statistics coming out many years ago, and they were already at 80+% in a lot of cases. So at any rate, guys, I appreciate you tuning in. I've got a lot going on this week. I'm actually traveling to New Mexico from Dallas, so I'm going to have some car content. I'm also going to have some mountain content and some other random things that I plan on adding, some YouTube shorts as well as a couple of videos. So I hope you guys tune in. Thank you for continuing to support the channel. Hit the like button and subscribe. I appreciate everyone. Until next time, thank you.